Welcome to the 11th episode of How to ThinkScript. We are TOSindicators.com, home of the Volatility Box. We've been working on building our new Volatility Box tool for stocks. You can run the Volatility Box for over 8,300 tickers and use it to find trades like the one in Disney today. And Sudhir, if you're watching, one of our new Volatility Box members, he's the one who found this actual trade. Price fell perfectly into our Volatility Box entry line, which is the beginning of the clouds right here, and we had a really nice reaction from there. This gave you almost a dead perfect entry in Disney today, and that's really the power of the Volatility Box. You could have played this move with stock, with options, really whatever fits your trading style, but our Volatility Box gave you an incredible entry at the edge with an edge. That's the power of using the Volatility Box. The tool is currently invite only, but you can email us at contact@tosindicators.com to be added to the list. In today's video, we're going to do something a little bit different. One of our Volatility Box members, Dick K, he and I have been having some conversations after we came out with the Dynamic RSI Indicator, and really through our discussions, I learned this. And that's the Dynamic RSI Indicator is fabulous for people like Keith and myself who are a little bit more patient, but we prefer overbought, oversold confirmations. But for those of you who like more momentum, strong directional moves that often happen fast, and it's considered more of that breakout trading sort of trading style, then those Dynamic RSI candles may be a bit too slow for you. You want something that's helping you front run that momentum, and so that's where Dick and I, we started brainstorming of ways that we might be able to achieve this, right? And so ultimately, the DMI indicator is what we found to really be the go-to tool for most momentum and breakout traders. And so ultimately, the DMI is the tool that we found to be that go-to indicator for most traders who like to trade with specific bursts of momentum in a particular direction, whether you are swing or day trading. And so in tonight's video, we're going to take just that and start exactly there. We're going to take the built-in basic DMI indicator in ThinkOrSwim, and we're going to hopefully turn that into something magical and start to incorporate things like those colored candles, which Keith, if you're listening, you've got me hooked on those, man. They are phenomenal, and I think I can start to understand, right? Typically, I've seen colored candles associated with things that I don't really want to give up my screen real estate for. Every single part of my screen has critical value to me, and I've had conversations with many of you about this, but I treat it as such, and if I'm going to give you screen space for an indicator, then it better be providing some sort of value to me, right? I can easily tell if we are over a certain line, yes or no. I don't necessarily need colored candles for that. I like the colored candles for things like the dynamic RSI because it starts to look at a few different factors and it helps you make those decisions real time, especially when the markets are moving kind of quickly with the Volatility Box. But again, I think that they're useful at the edge, and those are again for our members only. So in today's video, we're going to build something with the DMI, but start to include things like the colored candles. And so for those of you that are interested in the dynamic RSI colored candles, hopefully today's video also starts to help you take that same knowledge and apply it to the dynamic RSI to then start to formulate your own set of colored candles. And so through this entire tutorial, we'll start with not only the DMI, but one thing that Dick in particular really insisted that we include with the DMI and claimed that it would be powerful. And Dick, I'm holding you to this, so let's actually see how this turns out. But it was the idea of including a multiple time frame analysis here, right? So I want to be able to see on any chart what every other chart looks like in terms of our DMI. And in order to do that, we need to approach creating this indicator in a little bit of a strategic manner where we have a color code which we can start to apply for things like the monthly, the daily, the 4-hour. Every single chart has, say, a legend which follows the same unique identity, right? And so this entire indicator, I think, is going to take you through the process of building something that's supported with multiple time frames, lets you see that on a chart with labels, as well as taking something as basic as the DMI and reading the ThinkOrSwim documentation to then turn it into something that we can start to use to help us time some of these explosive moves and start to be on the right side of them, and hopefully contrast the dynamic RSI from the oversold, overbought levels to accommodate more of the momentum trading style traders as well. However, there is one catch in all of this, and that's I'm going to purposely try and edit as little of this tutorial as possible and let you see the raw, unfiltered process. And so this will include things like typos, mistakes that I may make, just like that one, maybe some bugs in our code, but we'll go through this entire journey together. And at the end of it, we will build this indicator, which will work. But keep in mind that this will take you through the entire process, which usually you sort of see an edited version where the code is naturally clean. We've already sorted through some of the errors. This time you'll get to be at the front lines and see those happen yourself. But if you are following along the tutorial, then do be patient because this is something that you're seeing sort of the entire process end to end now. And so let's cover some of the topics that we'll be covering in today's tutorial. The first is how to read ThinkOrSwim documentation for the indicator and then take that and turn it into something with code where we can use our studies library and start to write some code, but really ThinkOrSwim has done some of the heavy lifting for us in terms of observations and patterns and given us a good starting point, as well as we know how to use the documentation in the actual indicator that we might be looking to use, which in this case is the DMI. The next thing that we'll be covering is how to integrate multiple aggregation periods. So for this in particular, there's a module of code that I'll be copy pasting in, and this is shared on the website. It's written by myself, and it's a module of code that will help us with the base framework for a multiple time frame analysis. And I've purposely made this shareable so that you can start to use it over and over again, almost like a DIY multiple time frame X indicator, because a lot of you I think are curious about this. So like a multiple time frame, say moving average crossover, things like the squeeze, whatever you might be interested in, any indicators we've built, any indicators you've built on your own, any indicators built into ThinkOrSwim, you should then just be able to take this module and plug that code into this module using the same sort of technique we'll do today and automatically get this multi-time frame functionality. Right, so I think that will be really useful in today's video and just beneficial for you as a user. And then finally, we'll talk about how to have user-controlled plot choices. So in particular with today's indicator, we'll be giving the user yourself two choices, right? You might want to see this plotted, or the results of this indicator plotted as colored candles, very similar to our dynamic RSI indicator. Or you might just like to see it like the old school way where you have a buy arrow and a sell arrow, or you might actually like to see both. Right, and so we'll learn ways that we can have users control this and how we can use the input parameter to achieve just that. If you'd like to skip the tutorial and start playing with the indicator right away, it's available to download for free on our website. And the link is in the description box below, as well as right here. It's tosindicators.com/indicators/MTF-DMI. With that, let's actually get started by first going to the ThinkOrSwim website and taking a look at their documentation for the DMI indicator. Let's start by heading to Google, and then we'll search for DMI ThinkOrSwim. And TD Ameritrade has a good amount of documentation with their ThinkOrSwim platform around each one of these indicators. And so I've already read this, so I'll highlight only the portions that I think are relevant for our portion. But if you're curious to learn more about sort of the underlying calculations of each of these plots, then this first paragraph is for you. But what we'll focus on is the second paragraph, which reads, DMI is a trend following indicator. DI plus crossing above the DI minus suggests uptrend conditions, and vice versa, DI plus crossing below the DI minus might signify the downtrend. ADX is used for confirmation. Trend indications are more likely to be correct if ADX is rising and its values are above 50. And I think this paragraph right here tells us everything that we really need to know to be our good first starting point to build out this DMI indicator. Right, and if we scroll down, we can see it takes in two inputs, which these are the things that go inside of the parentheses in our code, and that's length and average type. And it has three plots, DI plus, DI minus, which are the two things that it mentioned right here, and then ADX, which was the last thing, which was the confirmation. Right, and so I think we can use these three plots to start to build out our indicator. And so to quickly summarize that, and this is the last of the notes we have, and from here on out, we'll sort of be jumping into the deep end and now writing as we go along and thinking out loud. And so for an uptrend, we're looking for the DI plus line to cross above the DI minus line. For a downtrend, we're looking for the reverse, which is DI plus to cross below the DI minus. And then we're looking for the ADX to be greater than 50 for trend indicators to be accurate. Right? We want it to be a rising signal, they said, so we'll keep that in the back of our mind. And then really the question we ask ourselves almost at the end of every single indicator we build is, do we need, or more importantly, want any other confirmation signals? And this is where we'll just make the determination based on either how long the tutorial's gone or what the indicator looks like and the sort of stage that it's currently in and if it's looking good or not so far. So we'll start by going to ThinkOrSwim, and we'll go to our studies icon and click create to get started by writing some code. We'll say TI underscore MTF and then DMI. And then here, we'll go ahead and start by actually writing our first line of code. And so we said that there's two inputs that are needed, the length and the average type. So let's start with that. We'll say input length is equal to 14. And then average type, we'll say average type dot, and I think they said it's Wilders, and so we'll leave it at that. And then now it says at least one plot should be defined, which is fine. We're still writing our code out. Now we want to bring in each one of our plots and give them a value. And so if we come back to our Chrome window, we have DI plus here and DI minus. And so I think the way we would reference this is DMI dot and then each one of these plots. And so if we come back to ThinkOrSwim, we'll say def, and we'll call this, we'll just say plus, is equal to DMI, and then here we want the length, average type, and then we'll say dot DI plus, and then close this out. Invalid statement. Okay, that's might be because of the plus. Without the plus? DI plus. Let's try seeing if someone else has had this sort of issue. DMI ThinkScript. Han usually has some good resources. Let's see if they have anything. And so if we scroll, okay, so let's look at the actual code and see where they might reference what we're looking for. I don't see it here. Let's keep looking. And this is sort of the process. Okay, here's one. Oh, interesting. Okay, so there's quotes around it. Let's try that. Let's come back to ThinkOrSwim. We'll try quotes around the plus. Maybe it's because we're adding in the plus. Interesting. Okay, so I guess that's how we have to do that. So then def minus, we'll say DMI length, average type, and then I'm assuming it's the same thing. So DI minus. Fingers crossed. Okay, cool. And then we also want to bring in the ADX, so we'll say def ADX, and then same thing, def length, average type, dot. I'm assuming this is normal because there's nothing. Ah, cool. All right, so that worked out the way we thought it should. And so we had our bullish scenario already plotted out, right, using our PowerPoint where we said it's the plus crossing above the minus. And so let's type that out. So we'll say def bullish signal is equal to plus crosses above minus. And then we'll say def bearish signal is equal to plus crosses below minus. And then we also had that ADX condition, which was ADX has to be greater than 50. So if we say def ADX test, let's just say, ADX has to be greater than 50. And then now, if we use this to actually plot one entire signal, and so we'll use this, we'll start by just testing in increments, right? And so we'll just test out the bullish signals first. We'll say plot test bullish is equal to bullish signal and ADX test. And so now if we click OK, hopefully what we should see, and we'll make sure we need to declare that as lower, so we'll do that in the next time. Okay, so this has just been 0 all around. Let's see if on a bigger time frame we have more entries. No, interesting. Okay, let's try a different ticker. Okay, so if the SPY, so something's wrong here. So let's try and debug this. Okay, so if we come out, we'll comment out our actual plot code. Maybe, okay, so let's start by first observing this indicator. And so let's plot each of these instead of def. And so if we copy paste that, that should then give us the bottom indicator with the 3 lines. And we can see which one of these two conditions is causing us to have a 0, right? Which of these is 0? Is it the crossing above or is it the ADX condition? And so if we click OK, okay, so now we see the actual ADX or the DMI indicator. And so the blue line, I'm guessing, is the DI plus, and then the red is the DI minus, and then the white or the yellow in between, which however it looks, is the ADX. Okay, and so we had, wow, okay, so I think this is it. So we had our condition, which was ADX had to be above 50, which is way up here, and ADX, even the DMI didn't get to 50. Let's check a few other tickers to see if any others got to above 50. Like barely, if even there. And then let's try Home Depot. Yeah, this is capping out at 42. Interesting. Okay, so we might change out that ADX signal for the time being and see if we can still run with that bullish signal and see if that comes to be true first. And so if we say plot and plot, and then we can turn these to def again now that we know what it looks like. Actually, before we go, let's take a look. Actually, let's do this first. Yeah. Okay, so now we can see that there are actually, in fact, crossovers taking place. And so the red is anytime there's that bearish cross, blue is anytime there's a bullish cross. And we can see for the most part, right, where the signal happens, there on out, we have a nice flush down, signal up, nice move up higher, bearish signal here, kind of a fake out, bullish signal here, little move up higher, bearish signal, nice move down. Okay, so generally sort of works for the most part, even without the ADX condition. And so we'll leave the ADX maybe out for the time being, but we may come back to observe this, and this may be one of those conditions that we end at the end. And so let's just create sort of a parking lot here, and we'll say, we'll just copy paste that code in actually. Right, and so we can bring this all out. That's going to give us that error. Okay, cool. And then we also don't need this test bullish anymore now that we know that each of these bullish and bearish signals actually work. Okay, and whoops. Now let's go ahead and try and change these signals. We also want to have something that's for color coding, right? So when we say crosses above, that happens in one particular instance, and that will only be something used, say, maybe for the arrow. So that's what I think the bullish and the bearish signals might be. But if we want colored candles, then we would like to see the relationship where it's just always above or below. And so we might just say something like def bullish, we'll call it, let's say, zone. And we'll say plus is greater than minus. And then we'll say bearish zone is when the minus is, or sorry, when the plus, we'll just use the same terminology, is less than the minus. And then we'll close this out. And now if we have this, let's go ahead and actually bring in our first bit of plotting code for the colored candles to start to use that to test to see what this looks like. And so we'll say, actually, let's look this up so we can show you from the get-go. If we come in here and we look up price, assign price color, that's the function we're looking for, we can see how to actually use it. And so we see it's assign price color, and then you actually start by defining your colors. And I'm assuming in here you can start to add things like Boolean conditions, which we can then use to determine which colored candle should be what. Right? And so it's assign price color, but this is the process in which you can start to read about all of the different sorts of plots that ThinkOrSwim has. So we'll come back to ThinkOrSwim, assign price color, and then we'll say if bullish zone, then color dot green, else if bearish zone, then color dot red, and then we'll say else yellow, right? And then we'll close this out. Actually, we need to say color dot yellow here. Okay, and then now if we click OK, hopefully what we should see before we actually see any of the candles is that they should now have color, and they should either be green, red, or yellow. So clicking OK, and OK, we see nothing's happened yet. Okay, there we go. Now the candles actually changed, and we can see that we now have candles that change for the most part, and it's pretty obvious to tell when it doesn't work, right? Because you have something like this guy, which is an island, where you know that it's not worked, but then you take a look at all the other times that it's worked, and so you can just count the number of times that we've had an island. That, for example, gives you just an incredible amount of power in its own. This was another island. Again, times that you might have entered too early. You need to know when to get out, and that's really the next day with the reversal where you know that it's once again a red candle. Right, and let's just see what this looks like in its base format and then decide if we need to make any improvements or not. And so looking at this on the SPY, again, sort of two islands here. Nice sort of move here, but I would call this an island too, like a fake bullish reversal. And maybe something like our market pulse on top. I'm just curious before we continue, just so that we don't do more work than we need to do. If that gave us any useful information. So this might have been your one cue is, okay, you're going on a bullish zone while you're still below our variable moving average while we've just crossed below. Maybe, but that's now starting to sort of be that what if game of if you happen to have that magical ball. And so maybe there's some room to make this a little bit better. And so we'll come back to our code. And let's try and change this. And so maybe now is where we can bring in our ADX and try and bring in a definition for this intermediary color of yellow. And so for that, let's actually go back and plot these out because we want to observe what the ADX looks like, and then see if there's any patterns there that we might be able to pull out, something of that sort that then helps us figure out that, okay, this is a condition that lets us now know that we're sort of chopping sideways and no clear direction, green or red. And hopefully that's what these islands can then start to become. And so we'll use those as our areas of focus to study if there was something here that told us that this guy in particular and this guy in particular didn't really work, right? And so if we come straight down, what I noticed here on the pattern is we're converging. All of our lines are sort of meeting here at the middle. And there's probably one point in which I think all three probably cross together. Let's take a look at this guy here. And we can see once again, it's almost those two inverted triangles. And we need to figure out a way to turn this into code. Let's also take a look to see what the ADX was doing here. And so the ADX here was in a declining mode technically. But the question is, how do you measure declining? Maybe you would compare, say, the value here. So if our DI plus crosses below and our ADX is below, that might be, well, our ADX was above here. Right, let's keep looking. Let's take a look at a few other tickers. And so let's actually come down to a smaller time frame first. Let's come down to say something like a 5 minute and take a look to see when we had some of these islands taking place. So we had an island here. Again, sort of that similar scenario where we have this bullish signal and our ADX is sloping down and our ADX is outside of both of these lines. Really, it's also the distance between these two lines, I think, that's a little bit telling. But I wonder if the distance is different on like a ticker by ticker basis and also on a time frame basis, right? And so like in this case, for example, this is where I think you had your false entry and this sort of a move was about 5 points. Let's now come back to the daily chart and see what it was like here. And this is hopefully giving you an idea into the process. It is a little bit time intensive. It is a little bit sort of mundane, but this maybe helps. This maybe helps. I don't know. Right, and here we see it's 7. So once again, it's less than 10 is what I'm noticing. Okay, so what if we said if the difference between, okay, so if the ADX is above, then we're going to take the, or if the minus is above, then the plus, or yeah, we'll take the top line minus the bottom line, and we'd like to know what that value is. And if that value is, let's say, less than 10 maybe to start off, then call that a false signal. So let's try and code that in. Okay, so we'll say def narrow range test. We'll say if minus is greater than plus, then we want minus plus. Actually, we'll just call this the range, the narrow range, and then we'll have another test variable so that if we want to do more things with this variable, we can. And so we'll say if minus is greater than plus, then do the minus the plus. Else, if plus is greater than minus, then we want plus minus. Else, we'll just say 0. Right? And it should really always be one of these conditions. One of these lines should always be on top. And if they're equal, then we'll purposely say this is equal to 0. Delete that. And now we'll bring in our narrow range test where we'll say if narrow range, actually we can use the same nomenclature we did below. So we'll just say narrow range has to be greater than or equal to 10. And so if it's less than that, it'll fail. And so if it fails, then it should be yellow. And so we'll say if bullish zone, and I think we may actually need to bump up our yellow color at the beginning because the bullish zone supersedes because the plus could be above the minus because this is a different sort of check. And so we'll add this at the front. We'll say if narrow range test. And so this is that narrow range, then color dot yellow. else if bullish zone, then color dot green, else if bearish zone, then color dot red, and then else if there's ever sort of any edge cases, then we'll just give them the generic color of yellow to be safe. And now if we click OK, hopefully we should see some more yellow candles in place of some of these islands. Huh, that didn't work the way we expected. It was sort of the opposite. So let's take a look. Actually, we reversed it, right? We needed to say if not narrow range test. And so now if we click apply, there we go. More like what we were hoping to see. So we see a lot less red here, right? What was previous islands. Some of these moves short did turn into yellow, but I think yellow is a more accurate representation for that than red. And so I think this here gives it to us in a pretty good scenario, right? And now I think we're in a pretty decent shape where we can take off this once again, and we'll now bring in our colors, but let's take a look one last time to see if there's any last sort of glaring patterns based on where this might have been wrong. And so once again, we see we're still a little bit wrong, maybe here, right? You might say a little early, you would call these islands, but we did ultimately have a nice bearish move down lower. So let's try looking at a bit more of, let's say like a CGC type stock. Okay, so here we go from red to yellow, caution, caution, right? So caution, caution. This is technically really where that breakout should have happened. And so I would argue that this candle should have been green. Why did this not get green? And so here we measure the actual distance. Okay, I could see maybe it was close to the edge, perhaps. And so we'll let this one sort of slide. Dish is sort of glaringly obvious wrong. Well, let's take a look to see what happened here. It was a good precursor of what was to come, but I think if you took a trade here, there's no way you would have survived this. So let's observe this guy right here. And so that's where you had an area to short, but our ADX line was above our plus line. And that was a false signal. Interesting. Okay. And so is there any other time where our ADX line is above our plus sign where we should not have shorted? No, this was a pretty good short. Okay, so we can't make a general rule out of that. So let's come back and see if there's anything else here. That is a little bit sandwiched, maybe. Was this just a trade that didn't work out? Maybe. Okay, I think for the purposes of this tutorial, so you're not just sort of here listening to me ramble on, I'll continue on. But if you guys see any more of these patterns, feel free to just sort of comment even in the YouTube video, or just email us directly. And one of our members, Paul, had this great idea, which I think we're just going to start to make the new standard, is anytime we have an update to the code, it's going to be in the code header. We'll have some update notes listed there, as well as on the website. And so this will sort of be true for indicators here on out, not really for indicators that we've already made. But I think this is a pretty good idea, which now lets us keep track of some of the changes that we make based off maybe some patterns that you all might find. And we'll make sure we give all of you the appropriate credit. But then, as a follow-up, for any of you then looking for the most up-to-date version of this indicator, it'll just be straight on the website. So just keep looking. If it ever changes, updates, so on and so forth, it'll always be there. Let's keep moving right along. Next, we'll take a look at trying to turn this into our multiple time frame sort of chart or a study where we have a bunch of labels in the top right hand corner. So in this case, it's a daily chart. So we would have our daily, our weekly, our monthly, our 2-day or 3-day, however many different labels you'd want, they would all be displaying there, right? And that's our next goal in this next segment of this indicator build. So let's go ahead and do that. And so to first do that, we'll need to now create our third zone. Right, we have a bullish, we have a bearish zone. We'll also need a neutral zone because we'll need to have these three sort of segments, if you remember from the beginning, that we can start to divide all the days up, right? So either the 5-minute chart is bullish, bearish, or neutral zone territory, which then tells us on the labels using colors which color we should be using to actually plot the label. And so now let's go ahead and include that. And so for our neutral zone, we can just say if not bullish zone and not bearish zone, then it's neutral zone. I also want to add in our narrow range test here. Right? And so we'll just include that as part of this condition altogether. And then I think the next update, so we'll also change this not narrow range test to be neutral zone. And then I think we can also turn these back now to deaths. And this cleans up the code. Now we need to also start to include the labels. And so first, let me show you what the multiple time frame code looks like, and then we'll go ahead and try and create it ourselves for this guy. Right? And so this is that module of code that I said I had written, and this is for the squeeze. And so really, let's just study the format because I think that's what we need to take away from this. So at the top, globally, we have our inputs. And then we have our variables for each aggregation period with the word month ahead of all the monthly variables. And then we can see it's really, we have all the variables here. And just make a note of the syntax. It's def and then the variable, but nothing after. We're not actually defining this variable here. But we define that variable inside of our if block, in which we're checking if we're less than, or actually if the aggregation period is less than whatever the aggregation period that we're testing for is. And if that's true, then it'll actually show you the label. And so this way you see all of the labels for aggregation periods above the chart time frame you're on. So if you're in a 5-minute chart, you'll see a 15, 30, so on and so forth, but you'll never see a 1, 2, 3, or 4-minute chart. And that's just the way ThinkOrSwim operates as part of the rules. And then we see that the else tag in each of those is closed out with a 0. And then we have our add label tab, in which we can see that we've given the label the condition of, say, being a monthly. And then this is true. And so for us, this will be something like if it's bullish, bearish, or neutral zone, then we want that label to plot really always, or we can even say yes, just to keep things simpler. And then we'll give this the daily aggregation period. And then we might even change this now to be our specific colors. And so we'll change the bullish to be green, the bearish to be red, and then the neutral to be yellow. But do this so that we can see all of the different time frames in one chart. Right? And so after this, you can see really everything else is just copy pasted. But anywhere a month is said, we're now changing it to be week. And so really we have to do this effort once, but then we can just copy paste to achieve the rest of it. And so if we come back to our indicator here, so our first thing that we'll need to do is we can copy paste this to a text editor now. And so we're using Notepad++. And so here we'll just copy paste this in. Right, and now what we'd like to do, and so we'll just apply the TOS language. And this is the custom built language. If you guys don't have it, don't worry about it. But now we'll continue going through the actual build for this, right? And so the first thing is we'd like to change each of these variable names to now be inside of just the aggregation period. That's where we're going to define them. And we'd also like to add a month in front of every single one of the variable names that we have over here. And so we'll say def month plus, right? And then we'll just copy paste the word month because we're going to be using it quite a bit here in the next few minutes. And so we'll change each of these to be a capital. And so month ADX. And here, these values can stay the same, right? Because we're just getting the DMI. Now we'll come to our bullish signal, add in month, and then we'll change this to bullish. And then once again, add in month, change this to a capital B. And here we have to once again bring in our month plus, and then our month minus, right? And this is just really a whole copy paste game. And if you want to avoid this copy paste game, then you can just copy paste all of these variables from the website. And if you want to follow along, then you can follow along. Also, you'll notice so far we have really not used the ADX. So I'm going to include it in here just in case any of you have future patterns around it. But for this specific build, we don't use it. And so we'll just continue going down. And so now once again, month, narrow range. We'll copy the word month once again. Okay, come back here, narrow range test, and then we'll bring all of these in so they all basically say month. Right? And there's probably faster ways to do this where you could have just changed all the variables here one by one, but I'm doing this the manual way the first time just so you can kind of see every single variable that we're changing. Right? And so anywhere it says plus now, I'm just going to go ahead and use month plus, and then now we'll do the minus right here. Then we have month, and then I think the last was the minus, so minus, and then we have our month plus that we can copy paste, month plus, and then we have month narrow range test, month narrow range test, and then we'll also need to add in month here, and then change this to bullish, and then once again, we'll repeat the process 3 more times. Unfortunately, that is the nature of this particular mod on this indicator. And so here we'll bring in month bullish zone, month bearish zone, and then that takes care of all of our actual variables. Now this we may actually leave at the bottom, and we'll try and maybe create one more of these, which is really just for whichever chart you're on. And we'll see if this actually works within it. We might say, yeah, actually, let's just include this inside of that code. And so we'll say, actually, I don't think you can include this inside of. I don't think you can include plots inside of an if-else blocks, and so we'll leave this for outside. And actually, what I think no, we'll leave this inside of the same indicator for right now, but we'll just move this down towards the bottom. Right, and so we have all of this month. Now we need to make it look a little bit more like this, and so we'll start to bring in our aggregation period test. And so here we have if aggregation period. We'll close this out. We'll say else. And then we'll close this guy out. And so this is our basic structure, right? We need to get from this code and move all of this code inside of here where we have just the variable names defined outside of the if-else block. And then our individual monthly variables are defined inside. And so the way we'll do that is by first copy pasting this entire code and bring that in here. And let's just tab this over just so it stays nice and neat. And now what we'll do is get rid of all of the defs. And a fast way that we'll do it here is we'll just Control F. We'll replace anytime there's a def and just replace that with a blank. Right. Oh, whoops. We wanted that to be only in the selection, so we'll just Control Z that, come back, and make sure this time we select only our selection. And so we'll say in selection and then replace all. And that now just took care of that. And here we want only our definitions, right? And so anything outside of it, we don't really want. And so we're going to just remove and delete it all. And so now, hopefully, once we have this finished, we now have a very clean, easy template that we can copy paste and just start to use that same trick that we just used to find replace trick to change all of our month instances to now say week, to now say day, so on and so forth. I think you get the idea. And so let me just finish this guy up right here. And this is where I think if you are doing this, it helps to have music because this is kind of a boring process, and so music makes it go by a lot faster. Now for our else block, so let's just scoot this guy up. For our else block, we can copy paste this in. Right, same sort of thing, and this time we'll just make this equal to 0, and then we'll copy paste this and bring that to now be our final side. And so this way, essentially, we're only having this to run. We're only having these run if we meet these criteria of being on a monthly aggregation period or less than that, and if not, then it just doesn't even show up. And so all of these values are then 0. Which then makes our candles the appropriate color, right? And so one thing that we need to still add inside of this is our add label code. And if we come in here, what we'll notice is our add label code is outside of this particular aggregation period. And that's why we added in the month squeeze, which essentially now looks at that. And so we'll go ahead and bring the same sort of code in. We won't even copy paste that. Let's write this from scratch. And so we'll say add label, and we always want this actually we only want this label to be there if we have either a monthly bullish zone, month bearish zone, or month neutral zone. Let's just do this the right way, and so we'll say month bullish zone or month bearish zone or month and then the last is neutral zone. Right, and so if any of these are true, then yes, plot this label. And so generally speaking, this should plot every single time. And then here we want this to be our monthly, and so we'll say M, and we'll close. We'll put our comma, and now we need to start defining our colors. Right, and so we'll say if monthly bullish zone, then color dot green. Else if monthly bearish zone, then color dot red, and then finally else if monthly neutral zone, then color dot yellow. And now if we close that out, and we can bring all of this code into our platform now and run this, and we'll leave our assign price color, but we'll replace all of this right up here. Okay, and so we see that there is in fact an error, and we see an else block is expected. And so we do need one more else block here, and so we'll say else color.gray. And so that should hopefully solve for that. And then we also need to change these variables down here, and so we'll say monthly bullish zone, monthly neutral zone, and then monthly bearish zone. And we can see we still have an error here. It doesn't recognize that we have any. Oh, it's because we said monthly and we said month. And so we'll just take out the LYs. Rookie mistake. We'll take out the LYs, take out the LYs, and take out the LY. Okay, so as you can see, this sort of stuff happens to all of us, just in case you happen to do that. Now, if we click OK, what we should hopefully see is an M on the left-hand side of our charts. And we have that down here. And so we'll decide if we want to make this a lower or upper study. We might just declare this to be upper. And so now we can see that we have this on our charts, and it's saying that on the monthly chart, we should be in a bearish zone. So let's come and check to see if this is true. We'll switch on over to our monthly chart. And if that is in fact true, right now we can see that that was not true. Our monthly zone is in fact yellow, but if we were on our daily chart, when it referenced our monthly zone, it assumed that we were red, since that's what we are on our daily chart. And so now let's come in here. Let's take a look. So I think one of the reasons that it's not working is because in our code, we haven't really been able to specify anywhere that it should be looking for the monthly aggregation period DMI in particular, because the way that it's built into ThinkOrSwim doesn't really give us the ability to change anything that actually takes our high or low as a price input, right? As we see sort of in that squeeze code, we're using a high or low. And so to remedy this, let's go ahead and come back to that same link that we had in which we found out the quotes, but here we can see that they've manually calculated that plus DM and then the minus DMI. And so we might use then, I think, this code to manually create what would be our own DI plus, right? And so we'll make this be the plus code, I think, and then we'll make this relevant per each aggregation period. And so if we try and do that, then I think the way we can bring that in is by saying, by copy pasting this guy, and then we'll come right back here and we can add that in. And so I think one thing we'll need to do is add these right here. So we'll say def month high diff, def month low diff, and hopefully those are the two variables we need to create so far. And so here we have high diff, right, and then low diff, and then this code is now what needs to go in our plus. And then this code is now what needs to go in our minus. And so now if we then, once again, just close out that, and we'll see that there should now be errors. And so we'll come in, we'll give this all the monthly high diff, month high diff, month high diff, high diff, and then all of these are the low diffs. Low, 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 and then here we'll make sure we add in period, month, and then high. Actually, we can just copy paste this in, and we'll add this to all of our pricing symbols. Right, and then so I think we'll also need a month low diff, backspace. And now if we just copy these two, and we also need to add them right down here, and we'll assign each of these to be a 0 and a 0. And then before we forget, we'll also just add this into our header just so we don't lose this URL, and we can also give credit where credit is due. And so I think we'll give this the credit. I think it's put together by both Hubert Center as well as Pete Hahn, and so we'll just we'll link this. So we'll say there, and then Pete Hahn plus Hubert Centers. Right, credit to, okay, perfect. And so now if we come back to the same code, right, and then let's keep observing what else they've sort of taken out from here, right? So this is your plus DM, your minus DM, and this is what we originally had in our plus DI. And so what we're seeing there is they've taken 100 and multiplied the moving average with that, and then divided that by the ATR. And actually, we need to change that to just be the plus DM, unfortunately, and then our actual plus will be this code right here. And so we still need a few more pieces of code, so we'll change this first to plus DM, and so we'll say monthly plus DM here, and then we'll also create those, so month plus DM, def month minus DM, right, and then we'll also just give each of these a 0 here. And then we need the same thing, month minus DM. And so now these two variables aren't defined anywhere, which we'll do in just a minute. Right, and so I think we haven't, they're still defined up here, but they're not defined in this first chunk of code. And so now we need to come in and create this ATR block. And so we'll go ahead and copy paste that guy in. And let's add that guy right beneath here. Right, and we'll say def ATR, and then here we'll just call this ATR, and then we'll define this above as we've been doing, and then moving average, average type, which we've already defined, true range, and then here, once again, we're going to give this the aggregation period of month, right, about for each of our true ranges. And so here we'll do that with the high, the low, and the close, and then we'll go ahead and do define this guy right here, and so we'll say def ATR, and then close that guy, and then we'll also define it right down here. And I probably should be doing this in a slightly systematic manner in terms of where we add these variables, but I'm kind of going through it a little bit fast right now. And so now that we have both of those, the only thing left is to bring in our actual formula. Oh, and sorry, we need to also make sure we add a month here. I forgot that because these variables are going to be different for week and all of that. And if we just do this correctly from the get-go, then it's very easy to copy paste this. And so while this first time is tedious, you'll notice that the second time onwards becomes a lot faster, right? And so now here we're going to say month plus, and we'll give this is equal to this guy right here. And then our plus DM should be month plus DM. And then our ATR should be month ATR. And then we'll also just, it's fine. Okay, and then let's make sure that we have now the minus also in place. And so we repeat the same thing now, but we'll say for month minus right here. And so month minus, right? And then the same sort of thing, month, and except in this case, we'll change this from plus to minus. And then same thing here, we'll add in month. And now let's come in here and let's copy paste this code into our notepad and copy paste it one more time for the week. And let's see if it ends up working for the week. I think that will be a good next test. So we'll copy paste this in here in a new column, and we'll just highlight everything, and we'll change anywhere where it says month, and we want this to turn to week. Right, and so we'll say aggregation, and we want this, we'll just capitalize it just so it stays nice and clean. But I think this should then give us everything we need for our weekly. And so hopefully we should be able to come and copy paste this guy in right here with no errors. And so this is automatically now done everything with our weekly zones. And we need to copy paste in our label and create a new label for our weekly. And here we'll say week bullish zone. And then we'll say, change this to be weak bearish zone. And then same thing, right? Weak neutral zone. And then now, if we once again bring this in and we say weak, okay, and then we can just copy paste from here on out. So weak bearish zone, and then weak neutral zone. Okay, and so let's click OK. Oh, we didn't change the M to say W. And now if we click OK, that shows us that the DMI on the weekly is a red. So let's go ahead and add in just our plain regular DMI. And here we'll go on the weekly chart to see if these conditions are in fact true. Actually, so our DMI minus is below our DMI plus, or is greater than our DMI plus, which is in fact true here as we code. So I paused the video and now resumed it, and you can see that I have now basically copy pasted all of them in and gave them the correct aggregation periods. And so all of this code is available for you to copy and paste if you're following along. The copy pasting process took well over 15 minutes of just silence, so I didn't want to have this recording during that, but hopefully that helps. And so now we can see that we have our labels changing color based off of whatever time frame we're on. We're on 3 minutes, so we only see things greater than 3 minutes, and we can see that on SPY, using this particular indicator, the DMI, it's telling us we're in a neutral zone on the weekly, 4-day, 3-day chart, bullish on the 2-day, daily, 4-hour chart, and then neutral on the 2-hour, bearish on the hourly, and then neutral for the rest of the charts, right? Now let's try and change tickers, and let's do something completely random like Procter & Gamble. Right, you'll notice it'll take a few minutes to populate, not a few minutes, it'll take a few seconds to populate. And what we're really looking for is as many solid colors as we can. So all greens, all reds, or all yellows. Well, technically all reds or greens if you're trying to be directional. But this then hopefully should start to give you an idea of how you can use this multi-time frame to really help you grasp the power of the DMI if you care to look at multiple different time frames, or at the very least you start to understand this concept of how to apply this for a wide range of tickers. Right, so now one thing that I'd like to also point out is you can see how much longer this code became. We're now close to 1,100 lines of code after we copy pasted that in. And so that is something that I think we would like to keep sort of in mind, that it wasn't necessarily ideal. And now we'd like to fix our price color, right? And so to do that, let's go ahead and copy paste all of this code, which is essentially the code that we have for just our monthlies. We'll come back to our notepad, copy paste that in, and then anywhere here, we're going to add in def at the beginning for all of these, right? And so this way we can define them, and then we'll remove the word month. And so this way it's just a generic one that's going to be true for whatever aggregation time frame you're on, or aggregation period. And then this way we still maintain those colored candles if we want. And then we may, I think for the purposes of this tutorial, skip out on the actual arrows, but let's go ahead and make sure that these candles we can turn on and turn off based on if we want to see the actual colors change or not. Right? And so here we'll type in month, and we'll just replace that with absolutely nothing. And so that should now give us our plain raw code. And then anywhere where it says period, it should now, we can actually just get rid of all of that code altogether. And so we'll say period, and it should look something like this with the space, right? And so we'll replace this all. And that now got rid of all of our periods, and so we'll use our default chart aggregation period, and we can come all the way down and just copy paste this guy. And then now we can do our assign price color, and then we can say, and let's actually first create an input so that the user can decide whether or not they want these colored candles or not. And so here at the very top, we'll say input colored candles on. Yes, actually we'll call it colored candles, right? And so we'll come back down and we'll say if colored candles on. And so if this is true, so basically the user has selected yes, only then will we proceed to continue down where we look at which, if we're in a bullish zone, bearish zone, or neutral zone, right? And so we'll say then if neutral zone, then color.yellow, else if bullish zone, then color.green, and then finally else if bearish zone, then color.red. And then let's not forget that last one from that last time error that we've now learned. We'll say else color.yellow. And then I think at the beginning it says an else block is expected. Let's actually just make this a little simpler. We'll say if colored candles on and neutral zone, then we would like the color to change. And then we'll just go ahead and copy paste this code in for the rest of this. And so we'll say if colored candles on and then if colored candles on and bearish zone. Right, and then so I think now once we click OK, this should hopefully give us close to our final indicator, if not our final indicator. And so what we can see here is we're on a 3-minute chart. Using our 3-minute chart, what we should hopefully see is yellow, which we're seeing. Okay, so cool, we know it's a yellow. Now let's bump up to a 4-minute chart and we should see these go green, our current candle. And so if I come to our time frame, I'll just bump this up 1. We'll go to a 4-minute. Green all of a sudden, and I can see all of this, and you'll notice the 3-minute has now slid off because it no longer qualifies to show on your chart. And I think that's the power of this DMI explosion. You can now start to apply this for a wide variety of tickers, but I think you can start to see the power of not only the multi-time frame analysis, but also the idea of starting to have these candles change colors only based on the information that you care to see. Treat your candles as real estate and make sure that you're only giving away that space whenever you deem it to be absolutely necessary, and you're only deeming that to be true whenever it provides value for you. Okay, so that actually brings us to the end of our tutorial. It did go quite a bit longer than I expected, but I'm hoping that raw process helped take you through sort of how we identify some of these issues, some things that we commonly see, how we go about thinking about how to create these indicators, how to read the ThinkOrSwim documentation, really a wide variety of things. These are the concepts we said we would cover, which was reading our ThinkOrSwim documentation, integrating aggregation periods, and then a user-controlled plot choices. We didn't quite integrate our arrows given the length of this tutorial, but that's okay. I think that's a fairly easy thing for those of you that care to have arrows on your charts. We have this DIY indicator module, which I'm pretty sure most of you now have a good idea of how to turn any indicator into a multi-time frame. And then we also just looked at the documentation to realize that they give us a good amount of information as it is. And Google has a good amount of ThinkScript knowledge as well, so we could take Hubert Santer's code and bring that in along with Pete Hahn's, and that way we could rebuild the DMI from scratch. I'm hoping not only does this indicator help you, but more importantly, this tutorial and the concepts, so that now you can go on and build your own indicators, or at least understand how some of these underlying functions work in ThinkOrSwim, and how you can start to use them to build your own things and start to extract your own level of information. Once again, if you'd like to download the indicator, it's available for free at our website, tosindicators.com/indicators/MTF-DMI. Thank you for watching this tutorial video. Again, give us some feedback based on if you liked sort of this less polished version in which you're able to see the process, but it is a little bit more rougher. Or if you prefer the polished version, then I'm happy to do that as well. It's really whatever works better for a majority of you, and that's what we'll go with. But please do give us some feedback. You have our email, contact@tosindicators.com. If you'd like to be on the invite list for our stock volatility box, then you can also send us an email once again. Hope this tutorial helps, and we'll see you in the next episode of How to ThinkScript. Take care, everyone.